So with that, I'm going to move over to Michelle. We're going to talk a little bit about global growth, which is clearly a very big focus at the moment. So the first question I want to ask is we've just had the latest round of PMI data, the June round of PMIs. What did we learn from the data?
So if we can go to the first slide, and Jim, you talked about a lot of this already, and highlighting, for example, the strength in China. So this slide does show the composite PMIs for a select set of countries. And as Jim said, you can see the strength in China, first in, first out. It took a couple of months. Their economy was reopening in March, and it wasn't until May that we actually saw the China PMI move into expansion territory, but it has continued to build on that strength and is now solidly back into expansion territory. If you look at some of the performance of the other countries, it's noticeable, again, speaking to countries that are benefiting perhaps from the strength in China. Australia is one of the top performers, and even notice that it's performed, it has performed strongly, even though in the downturn, it wasn't as hard hit as some of the other developed economies, but it was among the strongest of the performing PMIs. I think as you step back and look in general, the takeaway is that in most cases, you've seen the PMIs return close to, but not quite above, break-even levels, which means that what's happened is that the economies have stabilized, the contraction has stopped, but we're not yet into the growth mode. Now, again, as we said with China, it took a couple of months after the economies opened before you saw the solid move up into expansion territory, which, given how these diffusion indices are calculated, I would expect to see. I mean, it would be disappointing, for example, to only return to the pre-virus levels. You should see a case, because what the respondents are saying is that you've seen an increase in activity from the very low levels of activity seen during the lockdown. You would expect a far greater percentage of respondents would be noticing a pickup in activity post the COVID shutdowns, in which case the PMIs themselves should outperform. And that's likely looking at China, where these economies or the PMIs are headed. If we can look at the next slide, please. I do think it's interesting. So what we looked at were the composite PMIs, but now let's look at the breakdown between the manufacturing and service sector performance. On the right-hand side, you can see the experience now during the COVID-19 crisis. Unlike what we saw, and this comparison is to the global financial crisis on the left side, unlike what we saw during the global financial crisis, as well as prior downturns, the service sector in this COVID downturn was much harder hit. And indeed, much of the strength in the composite PMIs that we have seen in June was driven by this sharp rebound in service sector activity. And so you can see the recovery for both manufacturing and services in the COVID crisis. I think it's also important to note is much quicker. So two differentials versus what we saw in the global financial crisis. Obviously, the sharp hit to the service sector and the quick rebound in both cases post the initial downturn or the immediate hit. It just underscores a point that we've made many times. This crisis is very different than what we saw during the global financial crisis. The global financial crisis was a shutting down of the banking sector, which took many, many months and quarters actually to restart. In the global financial crisis, it's almost more akin to a natural disaster, a weather event. You had a complete shutdown in economic activity, which produced a very sharp, far sharper contraction in economic activity, but the reopening can be much quicker, aided by the fact that you have a banking sector that is healthy and is in a position, relatively healthy, and is in a position to help with the transition of the fiscal and monetary policy response to support the overall resumption in economic activity. So with that, Jim, I'll turn it back to you.
Yeah, so I want to guess probe a bit further on the growth picture. So we now have a reasonably good idea of what the second quarter looks like, which will probably be the weakest quarter on record for global economic growth. Uh, what does the forecast look like going forward? What are the big questions that we need to be asking about the global recovery into the second half of the year?
So if we can look at the third slide, we did just publish last week our global economic quarterly, and in that, of course, our updated estimates for global growth. And of course, well, April 1st, we had almost no visibility, and as Jim said, now with much of the second quarter data in hand, we have a much more clarity around what the true economic impact from COVID may be in the second quarter and then beyond. And you can see actually our numbers did not change very much from where we had thought they might look in April. We now have a 7.7 drop in second quarter global growth. So again, an unprecedented decline, a little bit worse than what we had anticipated in April, but a sharper rebound in the third quarter of now 7.4%. And if you look at the full year, we are looking for a decline of 4.4% for 2020, slightly about a little over percentage points worse than what we had thought 3 months ago, but a larger rebound in 21 of 6.1%. Now, you may look at these growth numbers and think, well, this looks pretty much like a V, but the distinction between growth rates and levels is very important at this time. If we can go to the next slide, we can take a look at the level of global GDP growth, and you can see here that while we do make up a good amount of the lost output, the output lost in the first half of 2020 in the third quarter, it takes a full 4 quarters from that second quarter low point for economic activity to even return to the pre-virus level that we saw at the end of 2019. You know, we talk about this often. I mean, I talk about it in the sense of the U.S. Payroll numbers. You know, we lost 20 odd million. Getting back the first 15 million isn't actually all that hard. It's that last 5 million or so that can take years. And it's a little bit of that same story when we think more broadly about GDP growth. We can make a lot of headway helped by unprecedented monetary and fiscal stimulus, but to actually close the gap will take some time. And this is due to what we see as economic scarring. There will be longer lasting damage that has been created because of the impact of COVID. And by that, we mean there will be corporate insolvencies. Not every company, even with fiscal support, is going to come out of this crisis intact. And there will be persistently high unemployment rates. And so that's the big question now as we move forward is to what degree has there been economic scarring? How much scarring has occurred? Now, looking at corporate insolvencies would be useful, but the data are very lagged. So what we're really going to be focused on is the unemployment situation. That actually maybe better than even the GDP numbers in terms of really tracking how the underlying economy looks. If you can just go to the next slide, please, you can see the path that we have for the major economies that we follow. Our forecasts, these are our forecasts for the unemployment rates across the US, the UK, the Euro area, and Japan. Now, different labor market structures, as well as different policy approaches, whether you saw fiscal policy aimed at subsidizing employment or subsidizing unemployment, if you were, like in the US with the supplemental unemployment benefit insurance. You therefore see different paths. In the US, a big spike that will gradually reverse. In the UK, a more gradual increase of the unemployment rate. The end result in all cases, of course, is that you still see the unemployment rate elevated versus pre-virus levels well into 2022. And so this is going to be the real question. There has been support that has been provided in the U.S. and the U.K. Obviously, we've had wage furloughs or job schemes and unemployment benefits that have helped to cushion the impact. But these factors this support is going to fade, and as that happens, the real question, I think, will be answered in terms of how much scarring is there. And as I said, our view is that there will be lasting damage that will create headwinds for global growth well into 2021. And with that, Jim, I'll turn it back to you.